Well, hi and welcome to another live training session. As always, we'll be looking at the markets now in real time and seeing what's going to happen over the next few hours, and also answer some questions that have come in over the last couple of days. And don't forget that if you're around when I record these live sessions, you're more than welcome to come and give me a call on Skype, and I'll take the call live whilst we're looking at the markets, or just shoot a question over on Twitter and I'll pick that up as well. All contact details are on the website. Right, let's make a start. Well, hi and welcome to another training session on the 16th of January. Okay, we've got an interesting show today. What I'm going to kick off with is just looking at the GBP here, because this is the only one that we've got set up with the two blue belief bars. You can see the second one here on the 4-hour chart. So what I've done is I've just set that up where it should be, and I'm going to drop over onto the 15-minute chart. And I've got that all set up, as you can see. Anyway, let's pull that up, and so you can see there we go, we've got that all set up. And what we'll be looking for here is high volume turn. We're looking at underlying strength in the market. So high volume turn, and we can see already we've had one here. So the market's come down, popped in a high volume here, and then the market's gone moved off on there. Pretty clockwork stuff. That's what we do. That's what we're looking for. Underlying strength and the weakness, but in this case, obviously underlying strength. And there we'll pick up on that, and then we get into a trade, very low risk for high reward. Now, what I want to do is, while I'm on this chart, is actually go through a couple of questions. Actually, three questions that came through. And about some high volume turns, and also there was a post on the forum. Actually, the person's name on the forum is General Longshorts, and that's his forum name. And he'd put in to say that he'd having a bit of a tough time with the high volume turns at this time. And could I explain these a little bit more? And he put a chart on showing where he'd actually bought the market in this particular case, and he'd been stopped out. Okay, now what I want to go through is actually tied into the exact trade that was taken, and this was on the GBP. It was yesterday. It was on the 1845 bar, which is this bar here. Now, what I want to explain is, it says held a time and a high volume turn entry into the market, and after a high volume turn occurs, that is in line with the market sentiment. In other words, we see the high volume turn forming, and we know this is a good time and now to enter. When or where is a good place to stick the entry? I've been stopped out by entering before the high volume turn has even finished a few times now due to my impatience. Okay, well, this trade as a high volume turn should never have been taken anyway, because it was not a high volume turn. The definition of a high volume turn is what we see over here. In this case, the underlying trend of the market is going up. So we see the market going up, stepping up continually, and we have the underlying trend, the underlying strength, given us from the 4-hour chart. We then see the market retrace. Now, you can often say, what's a retrace? How do you define a retrace? A retrace is any movement or a series of bars that come away from the underlying sentiment of the market, in this case strength. So you can see these bars here are stepping down, aren't they? And what happens when we get down to here, volume comes in, and then the next bar, the belief bar, and when I talk about bars, I'm referring more to the belief bar, which is the small horizontal bar, either yellow or blue. The next bar goes up. That is a high volume turn. Okay. Now, is this a high volume turn down here? Here's some high volume here, then a yellow, then a blue, and the market goes up. No, that is not a high volume turn, because the lower bar I want to see as the high volume. That's the bar that caused the turn. So here we go. This is a high volume turn. Here we can see market comes down, puts in volume, next bar is up. That indicates to us a high volume turn. Actually, I'm just looking at that very quickly there. There's quite a nice stop take there. You can see where the market's come back down here, and just taking out the stops under this bar here on this one, and then we've got into that up move there, and that actually makes that a doubly good high volume turn there. Very, very interesting. That. It's a shame I wasn't right around on that point there. That would have been quite a good trade to get into. But we are getting a little bit close to our target there, as you can see, over the 90 pips. Anyway, so going back to this trade that we were looking at here, this is absolutely not a high volume turn. Okay, so the next question is, where is a good place to enter on that high volume turn? Well, you don't know it's going to be a high volume turn, do you, until this bar actually closes. Until you can. It's a bit like the 4-hour chart when I said to you the other day how we can assess whether that bar is the second bar is going to be blue, and you can do just the same on on this as well. You know whether that bar is going to close above, that is the belief bar I'm talking to. You know pretty much as it gets towards the close of the bar, if that belief bar is sitting up here, you know, the likelihood of it travelling all the way back down here is very remote indeed. So you can anticipate that before that bar closes, that would indeed be an upward moving, you know, that's going to be a high volume turn. So in that case, what I'd be doing here, I'd be looking to enter as soon as I was convinced that market was this was definitely going to close up. That's where I'd be looking to enter the market and get into there long. Now, hasten to add, of course, at this point the market's underneath the 3 lines, isn't it? Underneath the TFT lines. So here, very, very cautious about this. Once we get above here, then we're getting to a whole different ball game, because now we're above the TFT and we can see that underlying strength is what is playing. It's playing out. Okay, so another look. Let's have a look down here. Again, high volume turn down here. Would you trade this one here? Down here, look. Market comes down, puts in the volume, jumps bar up. It's a great high volume turn, isn't it? But it is underneath the TFT tool. Therefore, the underlying strength of the market, that sentiment that we're looking for, is not with us. So that's not a sensible thing to do, is to trade off of these points down here, nor down here, and nor down. Well, that's not a high volume turn anyway, but certainly as we get to here, this one is. Okay, it's number 2. I have seen Martin use the 1 hour chart. Oh, I have yet to see Martin use the 1 hour chart. It seems he uses the 4 hour and the 15-minute charts exclusively. Okay, I will use the 1 hour chart if there is a lot of oscillation up and down through the TFT area through here. So I might well look at that over an hour period and turn to the hour chart and say, okay, well, during that period through there, let's have a quick look at the hour chart to condense down that activity. But really, you know, it's just one of those things that gives you a little bit more of a handle on something. It is not a do or die situation. You don't have to use that. And what I'm trying to do through these videos is show you the simplicity of what we do. I want you to keep it very, very simple. Okay, and you notice as well, it says that it also goes on to say, you notice how my style of trading is stripped down, so the charts are very clean. There's no 60VL high volume markups to speak of, and I don't seem to place much emphasis on high volume areas. Am I right in sensing he determines the underlying sentiment each day, looks for high volume turns in line with that sentiment, enters trades and trades off HVTs, and then maps exits based on 90-pick targets? That's it. That's what I do. I keep it very simple. Now, there are other pat traders who will look more into depth. They trade for different targets. They trade closer around the accumulation blocks that we see in PAT, which is these grey blocks that we see through here. They'll trade off of those, and that's the way they do it. Some of these traders are very experienced and been doing this a lot of years. Now, it doesn't mean to say you have to become more experienced to trade away from blocks and things like this. But what I'm saying is, and my argument really, if you like, is don't overcomplicate this business. Wait until you find the underlying strength or weakness in the market. Once you have that, then everything becomes safe about trading. It becomes a much easier process to choose the trade where you want to be, because you have that underlying strength or weakness. Anyway, so I'm going to call this one a day now. This will be the last video for the week, so have a great weekend, and I'll catch up with you on Monday. Pat software turns confusion into clarity and complex into simple. Pat's easy to understand, easy to use, and a complete trading solution. If you're not a member of the Pat team, then maybe you'd like to have a look. We have an active forum where you can come take a look at what we do in more depth, and you get to communicate with Pat users and find out what they're up to and how they're doing. If you'd like to pop in and have a look, then when this video finishes, shoot over to learningtotrade.com, find the big button that says visit the forum, click on that, and you'll go to the forum registration page. Top right corner of that page, you'll see a button that says create account. Click that, fill out your subscription details, and before you know it, even if you don't have Pat software, you'll quickly see how transparent markets are and how you can profit from them when you truly understand how the market makers method works. I'll see you on the other side.